Well, hey, everyone. This is Warren Howe. Hope you're having a great day as always. Right now, we are in the last week of 2021, guys. So, have you, there are a lot of things to catch up on. Let me know in the comments, right? For example, have you gotten your goals? We talked about that, right? What are your year to date returns? Did it meet? Did it fulfill your expectations? Did you beat the S&P 500, right? Are you constantly challenging yourselves? And most importantly, are you ready for 2022, right? So the reason I'm asking this is because our team, we constantly want to, me and my partner especially, we constantly want to sort of strategize for what's going to happen in 2022, what is likely to happen, how are we shifting our portfolios and rebalancing it, how should we invest or trade a certain way, because we are running a small little office, right? Family office. We're managing family funds, friends funds, our own funds, right? And the public portfolio, as you know. So we want to strategize the best way that we can to actually, get the most out of the markets, right? It could be stock price laggards, it could be, momentum trades, it could be, like what we preach, right? Combination of fundamental analysis and technical analysis, which is, our sort of specialty. So the reason why, and today we're going to talk about growth and value multiples, right? Growth and value multiples. But again, let me know in the chats, guys. Are you constantly challenging yourselves? How did your portfolios do? If you want to, drop a DM or you want to leave in the comments, right? Tag me, tag my name, and I want to hear about it, right? It's important that I know what's happening and whether or not you are ready for 2022. Yeah. Now I'm gonna go live soon, which is actually this week, right? And I want to be strategizing together and just sort of voicing out what are my strategies for 2022. But for this video, I want to talk about growth and value multiples moving forward to 2022. So I stumbled upon Cameron Dawson. I actually looked at CNBC and I looked at her and I said, hey, who is this Cameron Dawson, right? So apparently I followed her on Twitter and she's a chief market strategist at Field Point Private. Now, this is literally today. I just found out what is Field Point Private, and the source that she's doing so well on, which is combining this graph, is actually from Bloomberg and Field Point Private. So, what is this graph showing us? Yeah. This graph is basically showing us the PE multiples of the Russell Growth 1000 index and the Russell Value 1000 index and government, what she calls real yields, right? Real yields. Now the shift in real yields, how did it correlate? How does it correlate to the PE ratios and the how did growth stocks do well? Whether or not growth stocks did well, whether or not value stocks did well in relation to how real yields go. Government real yields fluctuate. Yep. So basically, what it shows, value PE, which is the RLV index, is purple. In red is the Russell Growth Index. Yep, which is growth PE, and the real rates, which is black. Now you got two sort of graphs here. You got the x-axis, which is 0 on the real yield rates, plus 0.5% and plus 1%, and obviously negative 0.5% and negative 1%. And these are the PE ratios for both Russell Growth and Russell Value indexes. Yep. Now, how did this actually move in tandem since 2016 all the way to 2021, right? You can actually notice here that ever since 2018, when real yields are actually, adding on, because as the economy gets better, real yields versus inflation is obviously up, right? You have to counter against inflation and the economy is getting better. That was before COVID, right? Literally just before COVID. So the economy was getting better. 2019 was actually one of the best years for the S&P because S&P 500 grew like 30%, as I remember. So you can see real yields actually plus 1% at that time versus inflation. Now, she defined it here later. We're going to talk about that a little bit. So what do you notice, right? You notice that value PEs, right, as per the Russell 1000 index, it also went down, right? PEs went down, growth went down as yields go up. So, obviously interest rates are always a comparing factor when it comes to, okay, like higher yields, higher interest rates, lower multiples, right? Obviously, because money flow is actually shifting more to, bonds or risk-free assets versus risky assets. So what happens is 2018, as what she said, growth PE valuations were from 17x on average all the way to 33x today, right? 33x today. But what she's actually pointing out is that value PEs have not really, increased, right? Now, the reason why I'm actually showing this is because this is part and parcel of our personal strategy for 2022. Now, I'm not trying to say sell all your growth stocks. I'm not trying to say pile all onto them into value stocks either. I'm trying to say, and my strategy is still the same. Growth stocks, because I've been buying for 5 years or 10 years, no matter what happens in the market, right? I already looked on the trajectory, done my heavy duty before I placed my money. My point is, why am I showing you this? Is because we can actually see how much more upside there is when it comes to value PE, right? On average, on the looking at the Russell versus growth stocks, right? Now there are plenty of headwinds coming in, right? Tapering is actually doubling its rate. Now I know stocks is not dependent on we don't live on stimulus, right? But that being said, though, there are a few more headwinds coming into the market, especially where the market is actually getting more trying to blend in or get more comfortable with the tapering news. And we all know the markets are crazy, right? Markets like, hey, hold my beer, right? I'm going to make you go crazy, make your life a living hell. So whenever we see the markets like that, I personally expect, right, the first half of 2022 to be more volatile. Now, I don't like to time the market. But this is actually a strategy as to, it's not like 2020 anymore. It's not like 2021 anymore. The markets are actually punishing, no income, low cash flow, even negative cash flow stocks. And this is why, right? So they already mentioned that by 2023, they're expecting to, raise rates. Not really in 2022, although tapering is actually confirmed. Then we see the real yields actually, going higher, which is going down the graph, right? So when real yields actually go down in terms of this data, we can actually see growth PEs go down as well. Now, when they go down, obviously that's the time to be piling on more, right? That's the time to be buying, especially on those growth stocks that are way more undervalued in the long run than it is before. What I'm trying to say is growth PE stocks, there are reasons why it's like a seller's market there, right? There are more reasons for growth PE stocks to actually go down rather than to go up because of this. Though that being said, though, does that mean I sell my Teslas? Does that mean I sell my SoFis, right? It doesn't mean that. I'm piling on more if my cash allows it. Yep. No, but I think this is very valuable because this is actually data that shows us that, hey, there could be more potential headwinds when it comes to growth PEs. Also, our money, right? Should we be more selective? Should we be more, when it comes to value PEs, right? Value stocks. What are the type of value stocks that we want to play in terms of this rotation right now? And coming 2022 especially. If you're not a fan of value, maybe you could just raise cash so that when real yields actually go up, right? The plus 1% and growth PE is actually discounted, we can wait. We can be patient. Right? So I think this is very important moving in, especially when we want to compare growth and value. Yep. So what she means by real yield is actually nominal yields minus inflation, right? Inflation is actually catering in, but essentially what it means is that, okay, higher yields, meaning higher interest rates, meaning growth PEs are going to get, beaten down. Value cyclicals, right? Value defensive stocks will be actually, worthwhile in that rotation, right? So I hope you got some value out of this today. Feel free to, follow Cameron Dawson and see what she's actually talking about in the tweets. But I feel that this is something that we really want to discuss coming into 2022 and when we strategize for our portfolios. Yep. So, I'll see you in the next video. Thank you, guys.